Manish had recently tweeted that back in 1980s, one kilo of bangan or something was just 1 rupee. Today it is 40 or 50 rupees. And he just extrapolated it to, I guess, somewhere around 2050. And he said कि तभी 300 या 400 का हो जाएगा. So 300 or 400 rupees per kg. Nicely, he said कि this is what inflation looks like. But we cannot perceive it in our heads.
Yeah, investing and life both are long term. You get enough number of opportunities, but you got to pick yourself up and never give up. If we focus on wrong things, like I have a big
Mhm.
car, I have a big house, yeah, but I have a bigger loan, that's a problem.
Mhm.
So I sold off my car, and suddenly one friend said, "Oh, so you turned a minimalist?" I said, "What is that supposed to mean?" I was not using the vehicle, I have sold it off. But
Yeah.
I'm not suggesting that anybody should become a minimalist. Live your own life, live the life that makes you happy. But
Mhm.
keep an eye on expenses. Benjamin Franklin said a beautiful thing, it's a small leak that sinks the boat. And expenses are those leaks in your boat.
Mhm. Hello, ladies and gentlemen. I think, today it's very difficult for me to introduce somebody, a guest for today, Mr. Amit Trivedi. It's very difficult because I'll tell you what. Um, I must have been 3 years old when he started his career. So I was learning to walk in my real life, and he was already running in his career. So I think, sir, it's not about the age. It's always about the wisdom that you bring to the table. Mr. Trivedi has been at the forefront of many uh, big mutual fund houses that we see today. He's advised them on various uh, areas and their processes, not just mutual fund companies, even the mutual fund distributors, big personal finance advisors. And personally, to me also, whenever I feel I can reach out to him or ask him something, he's always been more than generous of giving me his time, giving me a piece of his, you know, knowledge and experience over the years. One of the key things is, we share the passion for reading. So very avid reader. He's written 6 books. I think we can go on and on and on. And in 1 hour, the introduction will not be complete, but probably the podcast might be. So with that, I'll just try and cut short the introduction out here, because I think in many ways he is not he's somebody who has innovated in this space. He's somebody who has thought beyond the boundaries. He's somebody who has made personal finance super easy, not just for retail investors, but even for mutual fund advisors and everybody in the whole process. So, sir, we're more than happy to have you today on our podcast, and
Thanks,
I'm very sure
Jinay.
even the people listening to us.
Thanks, Jinay, for this generous introduction, and thanks, Team Thinkly, for this wonderful platform that you created.
So, sir, we just jump into our
Yeah.
conversation. You've you had a career of what, 32 years now. So 32 years. And what are some of the common mistakes that you still see today? These investors making with their hard-earned money.
So, Jinay, 32 years to a lot of people may sound to be a pretty long period. But if I expand the time horizon, and as you said, I mean, I love to read. I would actually say that I am a student. And when I study across longer time horizon, in financial markets, I have studied markets for more than 5 centuries. And a few things have not changed. And that's what I've written in one of my books, Riding the Roller Coaster, that lessons from financial market cycles we repeatedly forget. So, this we repeatedly forget is one key lesson that I have learned relating to the ups and downs of financial markets. The bad times teach us a lot of lessons, and I won't say a lot of new lessons. they teach us a lot of lessons, or rather reteach a lot of lessons. And then come the bull markets, and in bull markets, it's an eraser. We forget those lessons that we've learned, and we are ready to go back to primary school all over again when another bear market comes. So that's one big lesson that I've learned. We attribute success to our abilities. While it's the market that has gone up, it's the companies that we've invested have performed very well, but we feel that I have done something great. I identified the opportunities and we start taking that to our head. So a little bit of confidence is anyway required, but soon that confidence turns into overconfidence and then into arrogance. And this is where the inevitable happens, and we are ready to learn again. So ignorance about one's ignorance and ignorance about one's overconfidence. If you were to sum it up in one line, so that's the big lesson that I've learned. That's not changing. By the way, when it comes to financial market, I said 5 centuries, but the lesson is as old as the literature itself. Amrut Bindu Upanishad has one line which says, Mana eva manushyanam karanam bandha mokshayo. It's the human mind which is the reason behind bandhan, the bondage, and moksha, mukti or freedom. So eventually it all starts in the mind. And so long as we continue to hold that ancient mind, we are going to go through all these things. So to that extent, if you ask me in 30 years, what has not changed? Yeah, what has not changed in 6,000 years has not changed in last 30 years.
Can you expand that Upanishad? Because
Huh.
it's very significant when we're talking about the human mind and how it functions in these times.
So let me just bring in another angle, and this time it's on the same lines, but I'm now quoting from the Bhagavad Gita. At one stage in chapter 3, Arjun asks Bhagwan Krishna that you claimed that you taught this lesson to the sun at the beginning of the universe, and you repeatedly taught this lesson to various people, and today you are imparting that knowledge to me. So why do we keep forgetting? And that's where the Lord Himself said, it's the attachment, the greed, the anger, essentially a sum total of all the emotions that we tend to, people tend to forget those universal and basic lessons. Attachment, where does it arise from? It arises from the mind. We attach ourselves to things, people, thoughts, ideas, philosophies, and then so many other things. And we try to hold on to that while knowing that it is transient. Incidentally, the book that I referred, Roller Coaster, the basic idea behind roller coaster is it goes up and down. Everything is transient. A bull market is transient and a bear market is transient. One of the lessons in the Bible says, and while I quoted Upanishad and Bhagavad Gita, the Bible also has a similar lesson. The story of King Solomon, the fable of King Solomon, I should say, the line that King Solomon got he could uh, pull down his nerves because of one line, and that one line was, "This too shall pass." So if it's going to be transient, uh, the mind is unable to recognize that. Incidentally, and then just suddenly this happened. I don't know if it's serendipity or whatever. Recently, Morgan Housel wrote his book, Same as Ever. That book also talks about something very similar, and he says most people focus on what is current and transient and not talk about what is same as ever. So if you're able to differentiate between certain basic fundamental truths and something that is transient, then it becomes relatively easier to behave. And I'm not saying it will always lead to success and wealth, but at least your behavior would improve. It would cool down your nerves and you will be at peace with yourself.
Agreed. So it's always so when we say uh, same as ever or this too shall pass,
Hmm.
um, during a bull market, everybody
Hmm.
is confident that this
Yes,
will continue. And
yes,
during a bear market, everybody feels that this is the end of the era or something.
right.
Like if I think about it, March 2020 COVID was like I think everybody started predicting how the world is going to be different from today. And we're sitting 5 years from now, from that
Yeah,
incident,
yeah,
and we're all in our offices. Uh, there's nothing, nobody's wearing mask anymore. I mean, it's just we're back to the basics again.
yeah. No, that's exactly what, Jinay. I mean, uh, most of the predictions you pick up a few years later, and many of those predictions actually sound like good jokes. Not that they were intended at that point in time. At that point in time, they look like prophecies, but today they look like a joke. And in many cases, I've seen, and somebody said that this company has a great fortune, and he invested in that company, and the stock zoomed through the sky. But the reason for that stock price rise was completely different, and that was not even on the horizon when the investment was made. And you know the great
Hmm.
story of Titan, right? When Mr. Junjunwala invested in Titan stock, okay, Tanish was not even on the radar. And Titan is one of his best success stories. No, he's done his job, a great investor himself. But some of his biggest successes have come not because of the reason that he could identify that happened to be an accident. And I'm deliberately taking the name of one of the most successful investors, not even trying to say that he is not great. He was rather. But even in his case, the success came because of something that I mean, in spite of something he did not know. And mere mortals like us, one stock that I bought doubled in 3 months, and I will thump my chest and say I'm the greatest investor the world has ever seen. That's where the problems start, right? So these are too many examples of such behavior, and that behavior needs to be understood and controlled.
I remember, I mean, even Ramdev Agarwalji has gone on record and talked about Eicher Motors.
Exactly, exactly.
He bought the business because of the trucking vertical and not the motorcycle vertical.
Not
And
not the yeah.
motorcycle ended up outperforming. Even Sanjay Bakshi has said the same thing. So
So
even the
Rakesh ji himself has said in one of the interviews. So I'm actually quoting him. Yeah, I can't dare to analyze his performance.
yeah.
I'm only merely quoting him.
No, absolutely. I think even that's where one of the most common mistakes is this sort of overconfidence that retail investors tends to go in. Ki,
So
I
that's
can
where,
do it.
yeah, and that's where bull markets make us feel like experts.
Hmm.
Okay, once again, quoting from Riding the Roller Coaster, I've written there. In bull market, everybody becomes an expert. In bear market, everybody becomes wise. Today, after 6 7 months of whatever has happened in these stock markets, you start getting a lot of wise words. You should not do, you should do this, etc., etc. I told you so. No, I didn't tell you so. Sorry. You behaved exactly like me. So
Sure.
at the bottom of the market, suddenly we see everything going down. We see doomsday. At the top of the world, it feels like it will continue. And that's why King
Mm.
Solomon's, that message, this too shall pass. The bull market too shall pass, the bear market too shall pass. It's a tricky situation because intellectually knowing that and going against the crowd are two very, very different things. And it's not easy to go against the crowd. So in bull market, if I start selling, it's not easy. So anyway, most of the successes that you hear in markets, most of this greatest of the investors, they have acted as contrarians to the popular thoughts, beliefs, and behaviors. But for a large number of people, it's not easy to behave in that manner because the word contrarian itself says you have to be against the population. So if the whole population goes against the population, there is nothing contrarian.
Agreed. Agreed. And that's one of the biggest mistakes that lot of people make. I and bull markets or bear markets, and eventually the problem is, sir, ki they get wiped out so many times, and they never enter the market again.
So you're right. I mean, and there again, when we are learning lessons, are we learning the right lessons or not? Let's say if I were a kid and I started learning how to ride a bicycle, I fell down. What am I supposed to do? Stop touching the bicycle ever again? Or pick up the bicycle and try it out again? If I try it out, in a few months, I'll be able to ride the bicycle comfortably. Now, so many things in life work in that manner. Bicycle is a much simpler action. Investing in securities markets is not that easy. But you got to pick yourself up. You got to pick up or intuitively or with proper effort, learn and understand what works and what doesn't work. And that's the only way we can improve. But if we improve, then we can become reasonably good investors. Right? Before this podcast started, we were discussing, and I said I came into this field by accident. Now, let me just talk about that accident, and I'm just connecting it to the lessons that you learn. So, I never wanted to be in finance when I was a student. In fact, when I entered the MBA college, our college offered only two choices: finance and marketing. So I picked up marketing because I hated finance. Not because I loved marketing or I wanted to be in marketing or I knew what marketing was all about. Okay, that was not the case. But it was theory of elimination. I wanted to eliminate finance. So I entered marketing. It was that kind of a hatred. But after taking the first job, in 6 months, I could not survive that environment and I decided to quit. So I went to meet a few friends the same day evening and I was just, venting my frustration. And one of the guys said, "But we have an opening in our company. Would you be interested?" And that's how I joined finance company, finance industry. So think about another analogy that you were never taught how to swim. You never learned how to swim. And then somebody pushed you into water. What do you do in that case? Right? Haath pair maro. The objective there is to float, survive. But if you survive for 30 years, that means you
Mm.
did not give up.
Mm.
And if you do not give up for 30 years, you can become a reasonably decent swimmer. Investing and life both are long term. You get enough number of opportunities, but you got to pick yourself up and never give up. The moment you give up, that's the end of the story. You can give up in certain areas and flip, but investing, you can't. It's like in today's world, you can't avoid investing. So giving up is not an option. So what do? Pick up, learn, talk to people, read books. And then that's what. So a lot of people switch themselves out and say, this is not for me. It's like saying, okay, I mean, eating food is not for me. It doesn't work that way. So all of
Mm,
us need to understand, all of us, if we can't do it ourselves, and most of us can't do it ourselves, we got to take professional help and things work out.
mm. Agreed, agreed. So I'll just come back uh, to this region where we are talking about so many, I mean, the bull runs and the bear runs.
Yeah.
Now, in the last 32 years, you would have seen market crashes because of, so every market crash has a bull run before that, right? So
Yes.
you had Harshad Mehta scam, Ketan Parekh, dot-com bubble, global financial crisis, I think Fragile Five of 2013, and then COVID. So these 5, 6 life changing, uh, times. Now, what I want to understand is and since then, a lot of financial literacy has also taken up. Personal financial literacy has actually moved up. ANFI's done a lot of work, SEBI's done a lot of work. But has the investor evolved, or we find that the investor still remains more short term in nature? If they get something like a crypto, they would rather, switch there for an immediate gain rather than playing the slower game. So how has the shift happened, or we still there?
Uh, okay, so the answer to your question is yes and no, both. Has the shift happened? In certain areas, yes, and in certain areas, no. Uh, OECD, the Organization of Economic Cooperation and Development, they have defined financial literacy as a combination of knowledge, skills, and attitudes and behaviors. Right? But this is the definition that they came up with in 2020, and that is now very widely accepted across the world in various places. So a shift has been happening on the knowledge and skills side, but the attitude and the behaviors is where the shift has still not happened. And so that's why I said, I mean, it's yes and no both. Now, knowing terminology is one thing. So I know the European style contracts or American style contracts and the difference between the two when it comes to derivative contracts. I know the difference between the technology that is used by Bitcoin and the technology that is used by stablecoin. I understand that, but given that, does that instrument and the process help me achieve my financial goals in my life? Does that knowledge help make my life better? This is where the gap arises. So much has happened on the outside, which is markets, products, regulations, and stuff like that. I mean, if you ask so many people, just to give a slightly different example, they are expert at analyzing the union budget presented by the finance minister. But if you ask them how much money do you spend every month as a family, and then if there are 5 members in the family, you will have 10 answers from them. So what am I supposed to do? How do I make my life better? Do you look at finances in terms of life, or you look at finances which is outside of your life? Literacy has gone up in terms of knowing about things, taking it forward, and behaving yourself. Is where uh, I'm not a coach or a psychologist or anything, so I don't know how that behavior can be modified. But once again, quoting scriptures, some of the oldest lessons that we all have learned is Satyam Vada Dharmam Chara. We should always speak the truth. How many do it? That's the gap. And while it doesn't undermine the efforts of all the constituents, They have done a phenomenal job, and they must continue doing that phenomenal job further. But as recent as 2024, the same OECD's worldwide survey on financial literacy, and even the developed countries, majority of the population is failing to reach the cutoff level.
What is the cutoff level? Any, if
So,
you
so
can.
there are a few basic questions that they are
Uh,
asking, and 70% is the cutoff level. Majority of the population. So, if I remember correctly, in the developed world, 29% of the people could cross the cutoff. 71% could not
on financial literacy.
on financial literacy. Developed world.
Very hard to. Uh,
Exactly. Exactly. So, and that's an improvement, by the way, over 2020.
okay. Over to the 2020 was worse.
Yeah. Okay. So lot of efforts have gone in, and results are there to see. But the journey is still. I mean, we've only taken some baby steps. Journey is still long journey is ahead of us.
Okay. Okay. So when you mentioned a very interesting thing that you mentioned that people who can make budgets are not able to make their own budget. So I think Manish Chauhan of Jago Investor. So Manish had recently tweeted that back in 1980s, one kilo of bangan or something was just 1 rupee. Today it is 40 or 50 rupees. And he just extrapolated it to, I guess, somewhere around 2050. And he said कि तभी 300 या 400 का हो जाएगा. So 300 or 400 rupees per kg. And he very nicely he said कि this is what inflation looks like. But we cannot perceive it in our heads.
Yeah.
Now, what is it? I mean, how does it work?
Okay. So this is popularly called innumeracy in literature.
Okay.
So we are not so comfortable with numbers, and especially the price rise on account of inflation is a calculation on compounding, right? So because the inflation inflate the prices, and the further inflation would inflate the price even further above that. So there is a compounding effect. Not easy for us to do a mental calculation of it. I remember doing a workshop for a group of very senior doctors. So it was a group of roughly 60 or 70 super specialists. So, and I'm deliberately mentioning that they were super specialists because then you can think of their intelligence levels.
Correct.
They
Somebody
were
who spent like
absolute,
15
yeah,
years.
right? Absolutely bright people.
Mm.
So what I during the course of the workshop, at one stage I said, assume that 5 years back you needed 5,000 rupees per month for your expenses. I was anyway taking examples, so I said 5,000 rupees. If 5,000 was impossible for anybody in that room, but I said assume that it was 5,000 rupees 5 years back. Today it is 10,000 rupees. Yeah.
Mm.
Now tell me, 10 years down the line, if the prices continue to rise at the same rate, 10 years down the line, how much money would you need to run your household? Without exception, everybody said 5 became 10, 10 will become 15, 15 will become 20. That's the problem with inflation. We can't see that in 5 years the amount doubled. So 5 became 10, next 5 years it should become 20, and next 5 years it should become 40.
What?
Look at the gap between 20 and 40. You are only budgeting for half the household expenses, and that becomes a problem. You are either budgeting less, or your goals are in your mind assumed to be achievable. So it's a difficult part. Now, compounding by itself is a slightly complex subject for many kids. the secondary school mathematics that teaches this concept, a lot of kids struggle to understand the difference between simple interest and compound interest. But I have the bigger problem when it comes to financial literacy. Even subtraction is difficult in this world of financial planning. Subtraction,
Okay.
not compounding. So let me explain that. How many
Please,
people,
please.
yeah, how many people have you met who think that higher income can lead to higher wealth?
Yeah, I
The
think
twist,
everybody says that.
yes, almost everybody says that. The reality is it's not higher income, it's higher savings that will lead to higher wealth. And savings is income minus expenses. That's why the subtraction is a problem. A lot of people that you meet would think that more possessions that you have, wealthier you are. Who will adjust for the loans? Net worth is assets minus liabilities. Net worth is not assets. Wealth is not assets. Your possessions minus your liabilities is your wealth, is your worth. So I'm saying those kind of simple things, if we start understanding those simple things, then instead of only chasing after income, we will also keep a keen eye on our expenses. Instead of running after acquiring possessions, we'll ensure that we borrow smartly.
Great.
So I mean that's what my understanding over the years is. If we focus on wrong things, like I have a big
Mm,
car, I have a big house, yeah, but I have a bigger loan. That's a problem.
mm, mm. And
So inflation, as you said, I mean, what Manish was mentioning, it's difficult for most people. How do you address that? You can only use the example that Manish highlighted. I remember I used to work in Franklin Templeton, and in Franklin Templeton, we used to have a slide on inflation in exactly similar manner, where one item was masala dosa, the 1988 price and 1998 price, and then we had extrapolated to 2018 that a masala dosa would cost 300 or 400 rupees, and people would laugh at us. We said this is simple mathematics.
correct.
And then Franklin Templeton's masala dosa became very famous in those presentations in early 2000s. If we keep highlighting that, I think that was the seed. And today
Mm,
we see slightly better understanding of the concept of inflation. So the sapling has grown in size. The seed was planted maybe decades ago.
absolutely. I think I was just talking to my mother yesterday, and I was just telling her that the cost of raising a child, at least till 12th standard, as of today's numbers. So if I have a child today, probably she will reach, he or she will reach 12th standard somewhere in 2037 or sorry, uh, 2040, 45 odd, right? Now I'll have to spend 3 crores in the entire journey till then. And she was shocked.
Yeah,
She couldn't say a word
absolutely.
because, and the problem is no, but I think there was one mentioned by, I think whether I read it on LinkedIn, that Radhika Gupta was also saying that few years from now, international education will be 10 crores for most children who are going. So probably that is the amount of money that we have to start saving, or we have to account for right now.
Absolutely. And those are scary numbers. A lot of people that we've seen today have stretched themselves a bit too far. Suresh Sadagopan keeps highlighting this particular point that good education need not necessarily mean costly education.
Mm.
So dream for a good education, but you need not have to stretch. Having said that, the cost of education, the rate at which it is rising, is crazy. And in many cases, I'm deliberately quoting Suresh Sadagopan because in many cases, the quality of education is equated with the fees that you paid,
Correct.
right? And in that case, the parents' finances completely go haywire. And then
Mm.
if you look at today's US, then so many kids have graduated recently and they are not finding employment opportunities in the US. So after spending 2 or 3 crores over the last few years, and if they can't find suitable employment, the payback period on that investment or loan, whatever it is, gets so long that the kid would continue to live in negative net worth for years.
Mm.
So if inflation is not understood properly, the planning would be poorer. And in certain cases, the government published inflation number versus the actual inflation that hits us are completely different.
Correct.
Right? Let's take another example, very routine, mundane, day-to-day life example. So in the early 90s, when mobile telephones were introduced in India, you know what were the call rates? The first time, 16 rupees per minute
Correct.
for an incoming call, 16 rupees per minute, and 32 rupees per minute for an outgoing call. Now, look at today's rates. Today, incoming is free, and in most cases, outgoing is also free. And yet, the monthly bill that the entire family paid in the early to mid 90s was tiny bit compared to each individual paying that monthly bill in the family. So what
Mm.
has changed? Our usage, our patterns have changed. Today, I mean, then there was no internet. Today, we consume data like we hog on data. I mean, right now as we speak, we are hogging data actually, right? That's what we are doing.
Correct.
It was
Mm.
unimaginable the amount of usage and the way the world has changed. It
Mm.
was impossible to envisage it then. Is it good, bad? No. This is reality. It's not about what is good or what is bad. So if Radhika says education would cost 10 crores in the developed countries, let's sit up and listen to what she's saying. It helps us plan better. It helps us
Mm.
make better choices for ourselves.
Mm. So in these sort of um, times, and let's say, a lot of people, lot of apps have come up where they say, okay, you can make your own personal finance, one page financial plan or something like that. And these are the critical nuances that people tend to miss, right? Key particular lifestyle that I'm leading today. So let's say I may be having so 2018 was when I bought my car. It's been 7 years. I must have bought it for 7 or 8 lakh rupees or something like that. Now, when I am looking to upgrade from a luxury hatchback to even a luxury sedan or probably a mini SUV sort of a thing, the cost has suddenly gone from 8 lakhs to 22, 23 lakhs.
Yes.
While the experience of the car is not very different, engine is still the same. So the thing is that if I would have thought about it in terms of, uh, let's say, if I would have put it in my financial plan, I wouldn't have put that the 7 years down the line, I'll have to buy a car which is 3x of my current value.
Yeah.
I would have probably picked an inflation at what, 12%, and that would have barely doubled from there.
So
I
I'll give
think.
my example,
Hmm.
which is very similar to yours. And it was the same mistake. My first vehicle was a two-wheeler,
Hmm.
and my second vehicle was a four-wheeler. Who factored the inflation moving from a two-wheeler to a four-wheeler? Right? The cost of the vehicle itself was at a very different level. My two-wheeler was 40,000 rupees. The first car that I bought was 6.5 lakhs.
Hmm. My God. Okay.
Yeah.
Hmm.
15 times. Who would have factored that inflation? Now, that's what I call lifestyle inflation.
Correct.
I upgraded.
Mm.
If I went and bought a two-wheeler, so what I bought then was 40,000. Today I can buy a similar vehicle for maybe 80,000 or 1 lakh rupees. Not much of a difference.
Mm.
And I'm talking about 94 when I bought my first vehicle. So 94 to 2025, 30 years, if it goes up by two times or two and a half times, that's hardly any inflation,
Correct.
right? Now, we keep upgrading our lifestyles.
Mm.
This upgradation is not a financial decision. It has an impact on the finances, but it's an emotional decision. It has something to do with, if you go up the Maslow's hierarchy, it has something to do with your social status. It
Mm.
satisfies your ego or your position in the society. It's not the basic need, it's above that. So, that inflation, and again, I'm not saying that we should cut down on spending. I'm not recommending that everybody should be a minimalist. In fact, I
Mm.
didn't even know the existence of such a word till I sold off my car. Today, I don't have one. So I sold off my car, and suddenly one friend said, "Oh, so you turned a minimalist?" I said, "What is that supposed to mean?" I was not using the vehicle, I have sold it off. Right? I mean, but
Mm.
I'm not suggesting that anybody should become a minimalist. Live your own life, live the life that makes you happy, but
Mm.
keep an eye on expenses.
Mm.
Benjamin Franklin said a beautiful thing, it's a small leak that sinks the boat,
Correct.
and expenses are those leaks in your boat.
Mm. Mm. That is very true. And that's where you need professional help. That's where you need people who are in the industry and who can actually, these personal finance advisors. Apps will
So,
not do the work for you that way.
now let's come to the financial advisors.
Mm.
Okay, a lot of times people think that a financial advisor does a very limited job of selling a product, be it a mutual fund, be it a stock, be it an insurance policy or a loan or whatever. And this person finds the best. So he'll give me the cheapest loan, he'll find the best stock, he'll give me the cheapest insurance policy, and the job is done. Job is not that at all. The job is about understanding me as a person, understanding my family's requirements, and identifying a slew of products that can help improve my life. And the improvement in life is about two things. One, how can I, upgrade my life over the years? And second, while I'm upgrading my life, how can I protect my downside? Both are important. Sometimes a costlier life insurance policy or a costlier health insurance policy might be suitable for certain type of people compared to a cheaper one. This is
Correct.
where a good high quality advisor comes in. Secondly, once you give in to the advisor and surrender to the advisor, you know, a lot of mutual fund, and this organization FIFA, the Federation of Financial Advisor Mutual Fund Distributors, they run a beautiful campaign called Sarthi Zaruri Hai.
Mm.
And this Sarthi, I think somewhere it is derived from the relation between Arjun and Krishna.
Correct.
So, okay, so I keep going back to Mahabharata for
No, no,
various
please
reasons,
do.
but I mean, that's the place where I draw a lot of lessons from. Now, in that relationship between Arjun and Krishna, if we understand the nuances of their relationship, the Bhagavad Gita, which was recited in the middle of the battlefield, it begins with Arjun telling his Sarathi, Sri Krishna, who actually was Arjun's friend and a cousin. He says, "Take my chariot to the center of the two, but middle in the middle of the two battalions. Let me see who all have come to fight me. I'm the greatest warrior." So he actually sort of orders a friend Take the chariot to the middle of the battlefield. I want to see. Bhagwan Krishna follows. And then Brahmati Vachame Mana, Arjun loses his stability, his mental balance, and then he surrenders to Lord Krishna and say, I am your disciple. Now you show me the light. When you
mm,
surrender to the Supreme, then the Supreme recites Bhagavad Gita and gives you the Vishwarup Darshan. In the advisor-client relation also, a lot of times the clients do not, and I'm not saying that advisor should be treated like God. No,
mm,
that's not the point. But do you even divulge all the truth?
mm,
Do you share all the relevant information? Do you take that person's opinion whenever there is a financial matter? I know a lot of people. So somebody wanted to buy a house, and this person went to a financial advisor. The financial advisor made a plan and said, currently you can't afford to buy the second house. Now, that was the advice. It had nothing to do with which mutual fund or which stock or which insurance policy. It was about an expense. And the advisor said, based on your current situation, your future goals, currently you can't afford. So that's where, if you are Arjun, then you deserve Krishna.
mm,
And that's the relationship that we need to understand and respect. All of us have an Arjun in us, all of us have a Krishna in us. But in the battlefield, if Arjun tries to become God and then tells Sri Krishna, I am the warrior and you are my Sarthi, do whatever I tell you, then the outcome of Mahabharata could have been very different.
mm.
So that relation needs to be respected, that relationship needs to be nurtured and understood. Both have the responsibility.
Then there would have been no very, very little difference between Arjun and Duryodhan, right? If they were ordering Bhagwan Krishna to do something for them rather than following his orders.
So thanks for bringing this point out. There is another story in Mahabharata. When the war was about to begin, the Pandavas and Kauravas were traveling, scouting for support and partners. So at one point, Arjun and Duryodhan both landed up in Bhagwan Krishna's palace at the same time. Now, when Bhagwan Krishna was resting at that point in time, when Duryodhan went, he sat next to Bhagwan's head, close to his head. Arjun, being Arjun, and he always respected Krishna, he sat near Bhagwan's feet. Difference number one. So, where do you position yourself? And
Mm,
then, when Bhagwan Krishna wakes up, he says, Oh, Arjun, tell me what do you want? So, Duryodhan said, But I came before him. So, you should give the first choice to me. Then Bhagwan Krishna says, Oh, I didn't see you because you were sitting this side. Yeah, but if you came first, tell me what do you want. And then they discussed. So after listening to both, Bhagwan Krishna said, See, I'm not going to fight the war. I've decided. But I have a huge army called Narayani Sena. Okay. So you take Narayani Sena, then I'll go to the other side. If you want me, then the Narayani Sena would go to the other side. Okay. What do you choose? And he said, I'll give the first choice to Arjun. Duryodhan was upset. Arjun said, Bhagwan, I want you.
mm,
Duryodhan was happy. He got the whole army because that's exactly what he wanted. The difference between Arjun and Duryodhan was understanding the importance of a great guide versus a great army. Duryodhan was gathering strength. Arjun opted for wisdom. Now, look at that parallel in the world of personal finance. I may have the best of the portfolio of stocks, but if in the absence of a great advisor, I will misbehave with that great portfolio. That's Duryodhan in me.
Correct.
So uh, eventually, it all boils down to how we behave, how we look at things,
Hmm.
and whether we understand that somebody else is a good advisor or not. Incidentally, Mahabharata has so many beautiful stories that we can relate to. Even a lot of times people say, no, no, but the advisor also is a human being. He's also as vulnerable as I am. That is also true. Because the same Arjun who, totally disillusioned in the battlefield of Kurukshetra, a year back, when he was in the Agyatwas, the same Arjun in the guise of Bruhunala took the son of King Virat to the battlefield to fight the same Kauravas. And the son of King Virat, Uttar, he was running out of the battlefield. Arjun tried to convince him that is your battle and you got to fight. It is your dharma. A year later, he had
Correct.
forgotten his dharma. So when you are in that situation, you are emotionally attached, and that emotional
Hmm.
attachment brings you down. But if you are an advisor, you are able to see, as the scriptures say, through witness consciousness, as a sakshi, as a witness. When you
Hmm.
are a witness to somebody, you can see that, minus your emotions in a more neutral and objective way. And that also, even if the advisor is not the best of the ones, if somebody is able to see that truth through that, maya of our emotions and illusionments, that person would add a lot of value.
Hmm. That is very true. So rather than scouting for Bhagwan Krishna, start being a better Arjun first. That will make you a lot. I mean, the Bhagwan Krishna will appear if you
Bhagwan
are
Krishna will
the
appear.
yeah.
If you are Arjun, Bhagwan Krishna will appear.
The attitude part, which you said, key, the attitude and the behavior part, it has to change, not the
Has
knowledge
to
and the
change.
skills. You don't really need that sort of a knowledge. You don't really need
No,
to be a
I would
CFA to
actually
understand.
no, I would actually say while you need that knowledge and the skills, but
Hmm.
without that attitude, this knowledge and skills would be useless.
Hmm.
You will be a Karna who was a superior warrior, but at the right time, his knowledge did not help him.
Yeah.
He actually forgot at that point in time.
Hmm.
So, knowledge
Beautiful.
and skill important, but attitude and behavior, without that, the
Hmm.
knowledge and skill may not be helpful at the time it is required.
Hmm. There's this. I just come to a very important question that I've always,
Okay.
had. That how do you learn to separate this market noise from meaningful market signals? Now, there's noise and there's signal. And Arjun understands the signal. Karna, Duryodhana, and all are busy with the noise.
No,
And
the first and foremost thing that I would say is understand the basic nature of the markets, the instruments, the asset categories, the securities.
hmm,
The moment you see that equity markets are not volatile, that's a problem. The moment
hmm,
you see any investment that appears to be safe but is offering high returns, that's a problem. Right? So, what is the basic truth? The basic truth is in any open market where a large number of people can come and transact based on their opinions, the prices would be volatile. That's basic truth. Because different people would come with different opinions. And somebody would be positive, somebody would be negative, and that drives the prices up and down. So
hmm,
if the volatility is absent, that means a larger mass has gathered on one side. And when larger mass gathers on one side, the security misbehaves. At that time, it pays to be a contrarian.
hmm,
This is principle number one called volatility. Second part of the nature of such markets is, and this is related to the first one also, but when there is liquidity in that security, that means a lot of transactions are happening. When there are a lot of transactions happening, then the prices would fluctuate. If the prices are going up without much of a fluctuation, that means there is a problem with liquidity.
Hmm.
Long-term capital management, one of the biggest hedge funds managed by some of the finest brains in the world in 1994 to 98, in 4 years, the NAV of that fund went up 4 times. 4 times in 4 years is a CAGR of roughly 35-36% without volatility. So if you calculated the standard deviation was like a liquid fund, and the returns were more than a small cap fund.
Correct.
It can't exist, right? So what was
Cannot.
happening there? And the trading volumes were high. What was happening was long-term capital management was the counterparty to more than half the trades. That means
Hmm.
long-term capital management was providing liquidity to the market. So when you are providing liquidity, what happens when you need liquidity?
Correct.
There's nobody on the other side. So it went up from just to 4 times. So I'm
Hmm.
saying 1 to 4 in 4 years, and from 4 to 0.3 in 9 months. It went down by more than 90% in 9 months because everybody wanted liquidity and there was nobody to provide. So
Hmm.
liquidity and volatility will always go together. Third is when I cannot see the risk, it means that I can't see the risk. It doesn't mean there is no risk. It is my inability to see the risk. It's not absence of risk. So these are some fundamental truths. So what happens is when there is return which is high, disproportionately high, I have to search for the risk. If I find that, I have to understand the nature of that risk. If I don't find that, I have to stay away from that investment because otherwise I'm Abhimanyu entering the Chakravyu without knowing how to get out of it. These are fundamental truths. Understand those fundamental truths. Some of the other fundamental truths are behind the stock, there is a company. Now, meet investors who are claiming to be equity experts. Ask them how many balance sheets are they reading. And if they are reading, that means they are truly experts. If they are not reading balance sheets, then God save them. So, how do you differentiate between noise and signal? I think look at Morgan House's message, same as ever. What is transient, that is noise. What is same as ever is what you got to focus on.
Absolutely. I think I think it makes a lot of sense. I think even uh, Jeff Bezos has said in his newsletters that what doesn't change is what he tends to look at in a time when there is ever changing
Yeah.
phases.
So even
Agreed.
businesses are built
Hmm.
on the same premise.
Correct.
Yeah.
Hmm. Oh, that's brilliant. I think what doesn't change is having a right asset allocation. What doesn't change is having like right liquidity. What doesn't change is the fact that every bull market is will have a bear market and then there will be another bull market. So these things will keep on continuing. The cycles will keep on
So then
going.
every bull market will have a new set of winners.
Hmm.
And another truth that doesn't change is we have a tendency to be ahead of everybody else in identifying the next winner.
Correct.
That's the gambling instinct that all of us have. I want to
Hmm.
be ahead of everybody else. I can't be because I don't have the capability.
Hmm.
But we want that.
And that's why we don't get into simple stuff called an index fund, which even Warren Buffett has said that after I'm dead, just put it there. Don't worry about it.
But then, Jinna, you are settling for averages. Who loves to
Hmm.
be called an average? We want to be. That's the tendency, that's the overconfidence
Mm,
bias. Psychologists have done
mm,
surveys and found out. So the one simple question that they asked is, are you an above average driver, or below average driver in terms of your driving
mm,
skills?
mm,
93% responded saying I'm an above average driver. No, mathematically it is impossible. 93% can't be above average. Where does the average go in that case? That's the overconfidence that we have. And
correct.
that's where I want to be ahead of everybody else. No, even if I'm an average or slightly below average, my life would go through smoothly.
Mm,
So, as an educator, am I the best teacher? No, I'm not. I'm just about an average or below average teacher. But my life goes on.
mm,
I don't have to be the best teacher winning all the awards. And teaching is my profession. Then how on earth can I expect to be the best investor in a field which is not mine, which is investing? It's not my field. I'm a teacher, right? So in my profession, I accept to be average, but what is not mine, there I want to be supreme. Because I can
mm,
then easily blame on Jinay Savla. Jinay, my advisor, he doesn't ever give me the best mutual funds.
mm.
You see that,
Uh,
tendency over there, which is, uh,
mm.
yeah, but that's how we are. And it's just an observation. That's how we all are.
I agree. I completely agree. Uh, when we're talking about you as an educator, I want to talk to you about, your journey as an author. Like,
Huh.
what inspired you to write? And you've not just written, you've just gone on and on. And I'm very sure the seventh is also coming in very soon.
So that seventh is going in print next week.
See, I didn't know that. So
Not next week,
for all the viewers,
next month, not next week, not next month. Sorry. Uh,
okay.
but yeah. Anyway, yeah. So what made me write? I had been writing generally, rather jotting down thoughts and ideas. Somehow it became a habit. I don't know how and when it started, but it just became a habit. And then one day I was talking to Dr. Uma Shashikant. I mean, in this industry, she is the guru of everyone, and uh, same with me also. So one day I was talking to her, and I passed the criticism about one particular book. I said, "Ma'am, people write like this." She said, "Amit, you've got no right to complain. If you don't like what is available, then write yourself."
Mm,
It was that simple, and that resulted in my first book.
wow.
Okay, so sometimes people have to slap you on the face. I mean, though she physically didn't, but it was actually a slap on my face that please don't criticize.
Mm,
Doers don't criticize in a short thing. But the writing journey in financial markets began a little earlier. While I was working with Franklin Templeton, I had made up my mind that I want to quit and start my own business of training. But how do I establish myself? And that's where somebody connected me to media, and I gave my articles. Incidentally, it was January of 2007 where Money Control and Business Standard both simultaneously published my articles. So in a week's time, you can't ask for something better. Both leading, media,
yeah,
one online
just
and second print. So I got very lucky that way. And then the editors keep pushing you because they wanted content, and there were hardly any writers in those days. So they kept pushing, give me the next article, give me the next article. And then you started building on it further. So that was the article's journey. So they started in 2006, 7. Book happened in 2015. Uh, yeah, and then at some point you start realizing the benefit of writing. When I write, whoever reads, well, a lot of people have come and told me that they've liked the writing and they've benefited out of it. But more than that, personally, I have benefited a lot because when I write, my mind become clear. My mind
Mm.
becomes clear, and with that clarity of thought, uh, it becomes easier to take certain decisions. Uh, Incidentally, that writing goes very much in line with the other activities that I do, which is training and teaching. So there are incidental advantages, but huge advantages of writing. And I hope it continues.
So Dr. Uma Shashikant is to be, I mean, to be revered for, giving us an excellent author in personal finance space. Otherwise, even I'm of the
No, no,
view that a lot of the books.
she needs to be worshipped for many other reasons. This just
Okay.
happens to be one tiny uh, fruit in the entire orchard
Yeah,
of
and
what
and
all
I'm
she
very
has
sure
done.
if I tell this to Dr. Uma Shashikant, or she may listen to this at any point in time, she'll be say, "No, there's nothing to say. I just said out of what I felt. I mean, such is the
So I
humility
ensure
of all these
I
legends."
ensure no I ensure that she doesn't get away because in the foreword to riding the roller coaster, introduction to riding the roller coaster, I've written this incident. So I said she can't forget now. I put it on paper. No, but I mean her generosity and her humility that she wouldn't even take credit for that. But yeah, you got to give credit where it's due. Having said that, I must also mention Franklin Templeton, which allowed me to start writing in newspapers because I was an employee when I started publishing in newspaper. Well, the company
Yeah.
allowed me to do that. I mean, it's great on their part. I was a very reasonably junior person in that hierarchy, and they still allowed me to do that. I think that also talks a lot about a great organization.
I think in today's day and age when the media is and the spotlights and the hunt to create superstars is so high, we often tend to forget these gems, that live amongst us, that have pushed the boundaries,
Yeah.
and they are not very, they don't get worshipped in the media unlike the other counterparts do, and yet they silently go on doing their work.
So, over the years, one has realized there are two different types of people, or rather, there's actually a spectrum. But at one extreme, there are givers who
Okay.
keep giving. They don't
Mm,
worry about the payback. They just keep giving. And there are takers. So that's the spectrum. And all of us are in between. So long as in our limited capacity, if we try shifting towards the giver side, the world would become a better
mm,
place. And again, these are not my words. Bhagavad Gita says that the whole universe works on a principle of contribution.
mm.
The sun
True.
gives us light. What does it get in return from us? It continues to give us light. And
Right.
this written in Gita. I mean,
Uh,
the world universe works on the principle of contribution. And somewhere, the meaning that I derive out of it is if you are taking from the world and not giving, you are a thief.
Absolutely.
So there are gems, and they don't bother about taking credit for their great work. They just don't
Mm,
bother. They simply give because they follow the principle of nature, the law of the nature.
mm. It's very true. It's very true. I think, in the last conversation that we'd had, and you told me that all great leaders are avid readers.
Yeah.
So since you are an avid reader, and I'm not as avid as you, but I still try to. So I just wanted to ask you, if you would to share something that must have given you a new insight, some in your previous book or something like that that you just read in the last couple of weeks. Something that just shifted some paradigm for you.
I think it's often some books which stand out and hit you really hard. And books like, let's say, I've quoted Mahabharata and the Bhagavad Gita repeatedly out here. Those have had profound impact. And Mahabharata is something that I've not read in full. I've only read in bits and pieces. Bhagavad Gita, of course, it's a much smaller, work. So 700 shlokas. So that I've read in full, but that's something. But apart from that, there are books like Man's Search for Meaning by Viktor Frankl, Who
Hmm.
Moved My Cheese by Dr. Spencer Johnson. Some of these books have had profound impact, and you keep going back to those books. But it's not one book or one thing from that book which really shapes your character. Things start moving and dots start getting connected. And when those dots
Hmm.
get connected, some figure emerges, and
Hmm.
that shapes your thinking, that shapes your character. My sense is reading a lot is important, meeting a lot of people is important,
Hmm.
and then sit back and contemplate on that interaction you had with a great book or a great person. And I'm not saying great person meaning I don't have to meet Mahatma Gandhi or Albert Einstein at all points in time. My next door neighbor is a great person. The person whose auto or taxi that I'm traveling in is a great person.
Hmm.
Whatever interaction you had, reflect on it, sit, contemplate on it.
Hmm.
So all those interactions, all those observations, what you read, and you start connecting,
Hmm.
and new insights emerge. And these insights are new only for you. They are
Hmm.
somewhere there in the universe. The universe knows. We are only picking up, you're tuning to that frequency. All the radio
Hmm.
stations are on, they are delivering some wonderful messages. You decide
Hmm.
which frequency you want to tune into.
Hmm.
So, uh, reading books is one. Number two, don't, as they say, don't judge a book by its cover. Don't start with a bias that this is a great book, this is not a great book. I don't read this, I don't read that, I read only this. I don't start with that. Start with an open mind.
Hmm.
The third thing that I've learned over the years is when you are strongly believing in something, try to read the exactly opposite thought.
Okay.
To take an example from our own field, if you are totally convinced that equity is the best asset class,
Hmm.
read about commodities, read about
Hmm.
real estate as an investment.
Hmm.
If you're convinced that active funds are the best, then read about passives. If you were fully convinced that long term investing and buy and hold is the only success formula, then read about
Hmm.
successful traders in technical analysis and options trading.
Hmm.
And this lesson again, I'll go back to the history. And I mean, we're blessed with such wonderful history. There is there's an incident that in life of Adi Shankaracharya. Adi Shankaracharya believed in Advaitvad, which is non-dualism. And there was somewhere in the north of India, I think it was Varanasi or somewhere, I don't really remember the exact location, but there was a Pandit called Pandit Mandan Mishra. Pandit Mandan Mishra believed in Dvaitavad, the duality, the dualism. And in those days, such differences and debates, such differences would be settled through a debate between the two schools. So Pandit Mandan Mishra invited young Adi Shankara for a
mm,
debate. Now, Pandit Bandan Mishra must be in his 50s, and Adi Shankara was probably a teenager. Yeah, and then they had a debate. In the end, Pandit Bandan Mishra accepted defeat.
wow.
Yeah, and then somewhere it goes on to say that it is believed that Adi Shankaracharya knew more about dualism than Pandit Bandan Mishra, and that was the reason why he won the debate.
Okay.
If you
Mm,
think about it, if you
mm,
know everything or more about the other side than the other side itself knows, you are
mm,
invincible. And
mm,
it's not about winning a debate, it's about becoming that much richer.
mm,
And how do you become that much richer? So, as I said, read the opposites. The problem with reading the opposites is staying balanced because your very firmly held beliefs, where you have an attachment, those beliefs are challenged.
mm.
It
They're
is
shattered.
unsettling. Yeah, it is unsettling. And sometimes
Yeah.
you might have to shift sides
Mm,
because the other side is the truth. Pandit Mandan Mishra had to accept defeat,
mm, mm,
and it doesn't belittle him. That's the greatness of the man,
mm.
right? So
Agreed.
these are some of the things that I learned as a reader. My sense is all leaders are readers.
Mm,
It does not necessarily mean that if you're a reader, you will be a leader. It doesn't mean that.
mm,
But wherever you are, whatever position you are at, you will be able to lead well if you are a reader.
mm. I think you're able to navigate the situations in a much better way because you have those, sense of tools, those mechanisms to get out of it.
Absolutely. Absolutely.
Mm,
Absolutely.
it's true. And yet, reading is becoming a skill of the past. It is not. I mean, the way social media has picked up, a 30-second reel also these days seem to be very, very long for the upcoming
Yeah.
generation that is coming on.
Jinay, it's again the way the world has moved, and let's accept that as the reality is number one. But there again, I will go back to one of the points that we discussed earlier, the noise versus the signal.
Hmm.
What has more shelf life? Noise does not have. So now you look at what is current, what versus what is more enduring. So in the written world, books have a longer shelf life than magazines. Magazines have a
Hmm.
longer shelf life than newspapers. Now, from newspapers, you move to the online world where the social media in particular, where I want to know everything right now. How does it matter if I know something 3 days later? Actually, most of the
Hmm.
things don't matter, but we feel that 3 days later it is stale already, right? So focus on that. And if I know that as a human being, I've got 80 years or 90 years to live, then why do I worry about those 80 or 90 seconds only? Why not read something which is far more influential on my life? It's one part of it, and that's where reading long is a good habit. The second part is higher the uncertainty, higher is our desire to know in advance. And we have last 50 odd years, the speed of change has gone berserk. actually. I remember when I was a student, uh, $1 was 7 rupees 50 paisa. And it was for, my sister was 4 years ahead of me. In her textbook, it was 7 rupees 50 paisa. 4 years later, when I was a student, it was still 7 rupees 50 paisa. Right? Just, it was pegged, of course. But what I'm saying is the stability was much better. Today, things are changing so fast. Yesterday's winner is not to be seen today. Now, when the uncertainty is so high, we have a tendency to know the future in advance, either to safeguard our interest, which is where the survival instinct comes in, or capitalize on that and profit out of it, which is where gambling instinct comes. We get torn between the two. Now, when I want to know something in advance, then I need it fast. I need it in a hurry. And that's where my reading or attention span shortens. Tell me quickly, I don't have time. Sir, I have 100 years of life, 100 year of life. I have all the time in the world. No, but I want to know. So that tendency would remain, and that's again the truth, the reality. Can we change it? Well, I can only change it at my level. I can't even change it at my children's level. Forget about the world.
Agreed. So it's very interesting you've spoken about your children. Because I've been meaning to even ask you is how, as a parent, you have inculcated your habits of, I mean, the time-tested habits of personal finance into them. Because coming into this generation, money being in abundance, opportunities being in abundance, it's very easy to just say, "Okay, all right, it's spent today. Yeah, YOLO. You live only once," sort of a thing.
So it's an interesting thing, and majority of the parents complain that children don't listen, and they are absolutely right. Children don't listen. Children observe. So they learn by seeing what you do, and then they check whether what you are saying is in line with what you are doing. If those two are not aligned, they will take the easier thing. Just think about it. We are lazy animals, humans. Will always look for the easier route. So, if as a parent I'm saying something and doing something else, the child will pick up which is easier. The child will pick up where the child gets instant gratification, not delayed gratification. Can I forego today's pleasure for a better tomorrow? And can I exhibit it to my child? That's where the difference is coming. So, first, if you want your children to behave, first you behave. Second, don't assume that children are fools. A lot of times as parent, we feel like assuming बच्चा है उसको क्या समझ आएगा. Sorry, they are far more advanced, intelligent, and brighter than us. Like in the beginning, you asked me to adjust the camera because you appeared brighter than me, which is a generational difference, right? So that's with the kids or in parents also. The younger generation is generally brighter, smarter, and more intelligent. They'll have a better exposure. And incidentally, that exactly is progress. If the children are not smarter than the parent, then the human race is not progressing. If we keep producing dumber children, then we are regressing. Just think about it. And then accept that as reality that my kids are smarter than me. If my kids are smarter than me, it's number one, I have to showcase through my behavior, and number two, I have to explain my behavior. It's better to talk to them, engage them in the discussion without being judgmental whether they understand or not. If they don't understand, they'll ask. Create that culture where the kids feel free to ask you. Many times we say, "What are you asking? Idiot, you don't even know this." Then you are shutting down the kid. You are killing the curiosity of the kid. Encourage them to ask questions. Have the patience to listen to those gibberish or those useless questions. It'll appear to you to be useless, but somebody is building the knowledge base. And have patience to answer those questions. Have the patience to guide them to resources where they can find their answers. So there are many wonderful magazines and books which are available. Introduce them to that world. Well, there's a series from I think Malayalam Manorama. Tell me why. Brilliant series. So it picks up some concept and tell me why. Then it explains it in detail. So we subscribe to that magazine. We actually did many such tiny bit of things where they were introduced to books. Make them read. Actually, you sit with the kids and read out the books with them. So you sit and read. My daughter, even before she learnt reading, learnt words, you open a page of a book. She couldn't recognize the. She didn't can't differentiate between A and B at that age. But the moment you open the page, simply by looking at the color scheme and the drawings and the arrangement of words, she would read out the whole page. That was the level of memory, because she would want to read the same page again and again, and we would have read it 30 times, my wife and me. Now, let's come to the personal finance bit. Both my kids, my daughter and my son, it just happened. I don't know, by chance it happened. But when my daughter was 12 years old, I opened my net worth statement and the bank statement in front of her and explained it to her. And 5 years later, when my son was 12 years old, I did the same thing with him. I don't know what was that about the 12 years age, but it just happened that way. That was an accident. Show them the statement. Will they know? Well, I didn't even bother. But I was transparent about my financial situation. When my daughter was going to the college, I said, look, beta, this is my annual income and this is your college fee. This is my total investment portfolio and this is the amount that I'm going to spend towards your college. It is your responsibility that this investment yields good return on investment. You put that trust in the kid and you will be surprised. Pleasantly, positively, on the upside, beyond your imagination. Kids are smarter. But you have to start working hard when they are young.
Just beautiful. I think, the last 90 minutes that you spent with us, uh, like we spent in this discussion, the only recurring theme that I can think about has always been, think long term, think what doesn't change. Don't get too absorbed in what is transient. Don't get too absorbed in the noise. And I think, that's really very generous of you to give us that sort of time today. Uh,
My pleasure,
and
Jimmy.
your 500 years of reading, I think 5 centuries of reading of the markets is how you've actually given us the knowledge today. And of course, the delight was to bring our own shastras into action and say that these are not just shastra for your reading or for your enjoyment and go and say all hail the Lord or something like that. You can actually learn and you can actually apply
Yeah,
from all these shastras into your life in many different areas. I always see Mahabharata as the prime decision making, wartime strategy. But today, you also introduced an angle of personal finance. Of course, I read your book also at that time, but it did not hit me as hard as it did today. Probably because, we were having that discussion. And, but yeah, I mean, so thank you. Thank you so much for your time. Uh, I've created my notes, but I feel, you've actually uh, like what you said from the start is still the same, is how you ended the entire podcast, is go for the long term. If your kids know something at the age of 12 and they're able to replicate it 25, 30, 40, so you also build that long term strategy with them, not just in the markets, in every walk of life. And that's a huge thing that, we all learn from. And that's why, we feel that you are at the level of that legend. Of course, you'll not,
No,
uh,
no. You're too
you'll be,
generous.
it's not generous. It's I'm just presenting that argument, because you are living that point. You're not just teaching us. You've actually lived that point in the entire 90 minutes from whichever section we've addressed. Your entire conversation has always been think the long term and go for what is same as ever. With that, thank you so much for
Thank
being
you
here,
so
sir.
much, Jinay. Thanks a ton. It was, I mean, I thoroughly enjoyed the way you asked questions and, you know, uh, viewed the whole discussion. Was super. Thank you so much. And again, Thinkly team, I would once again like to thank all of you because you've been too generous in creating this platform. Thank you so much.
Thank you.